The airline industry is a long-cycle business.
Spirit has had one challenge after another coming out of the pandemic.
The icon of budget air travel in the U.S. has not been profitable since 2019, and it lost over $2 billion since 2020.
Airlines that have shown more success have great exposure to premium and corporate.
The biggest competitor that United has right now is Delta.
United very much wants to rule the world.
But when it comes to profitability, it's still chasing that number one spot.
Everybody's dealing with the fact that costs are 30% higher than they were in 2019.
Some airlines decided to place orders with Airbus for aircraft rather than Boeing,
which has been dealing with crisis after crisis.
Airbus has profited from the challenges that Boeing has faced.
We're really talking about a battle for the 2030s here. The 2020s have been decided.
Airbus and Boeing have been competing head-to-head for decades as the world's largest commercial airplane makers. The European-based Airbus entered the market 56 years after its rival. And today, 76% of the world's fleet is made up of Airbus and Boeing planes. But over the last few years, Airbus has edged out Boeing for market dominance.
Airbus is clearly in the lead, and they have a good lead. And if you just want to measure that, it's by the backlog of the airplanes.
Airbus has made a steady profit since the pandemic, while Boeing hasn't made a profit since 2018. Airbus's total backlog, which are planes that have been ordered but not yet delivered, is 8,726, compared to Boeing's 5,643, which represents billions of dollars in revenue and is estimated to take almost 13 years to complete.
We've gone from back in 1978, where you would hardly ever see an Airbus airplane in the US, to now having well over 50% of the market here in the US.
Since 2019, Airbus has delivered more planes annually than Boeing, which has been dealing with crisis after crisis, including 2 deadly crashes of its best-selling 737 MAX 8, which grounded that aircraft for nearly 2 years. It's also been dealing with significant financial losses, manufacturing issues, and production limitations.
One thing I want to be clear about, Airbus was already winning the race before the MAX ran into trouble because the A321 in general was winning share.
Narrowbodies make up the majority of the commercial aircraft flying today. These planes are very versatile. They can do multiple short trips a day or cross oceans and continents. Boeing's 737 was the world's best-selling narrowbody until 2019, when Airbus's A320 surpassed it in total orders. And depending on how many planes are delivered in 2025, the A320 could take the reins as the most produced jet family in history.
If you look across the board at the backlogs, and indeed at orders, everything is fine in every category except for the A321, which is absolutely crushing it.
CNBC explores how Airbus came to be the biggest commercial plane manufacturer and whether it can stay on top.
The official 737 christening ceremony took place in the new final assembly building.
In the late 60s, Boeing was dominating the commercial aircraft market. It had just debuted the 737 and the world's first ever wide-body jet, the massive 747. European aerospace companies took notice.
The biggest misconception about Airbus is that it was some sort of instant creation circa 1969. It really wasn't. It was a merger of a number of European national champion aerospace companies that had been building planes since World War II or World War I, and the only way they could do it was by pooling their resources, thus Airbus.
As more people took to the skies, airlines looked to operate bigger aircraft. At the time, all wide-body planes had 3 or 4 engines. For reference, a wide-body typically has 2 aisles, flies longer distances, and can carry anywhere from 250 to 500 passengers, while a narrow-body or single aisle has 1 single aisle through the cabin, flies shorter distances, and can have 100 to 230 seats.
Airbus shows up in the 1970s saying, hey, we have a wide-body plane, but with just 2 engines. And airlines sat up and said, whoa, 2 engines. And obviously, 2 engines that can take you the same distance as 3 are better because your maintenance costs are a lot lower.
In 1972, Airbus introduced the first twin-engine wide-body jetliner, the A300. Despite having only 2 engines, the A300 could only carry around 250 passengers, versus the massive 747, which could be configured to fit over 500.
Not a lot of people saw the need for an intermediate-sized jet, so production rates were 1 or 2 per month for quite a few years.
In 1978, the Deregulation Act was enacted in the U.S., creating more competition, new airlines, and expansion of smaller ones. As airline needs shifted in the 80s, the demand for cost-effective short-haul aircraft grew.
They began to see the need for a new generation single aisle, basically centered around 150 seats.
Airbus had not yet made a profit, and the company needed a plane in its fleet to compete with Boeing's popular narrowbody, the 737, which had already been around since 1967. Airbus launched the A320 single-aisle program in 1984.
The workhorse of the Airbus commercial jet family is the A320. The A320 was one of the few commercial aircraft designed to compete against Boeing's 737 powerhouse and has succeeded where others have failed. Its fuselage is a little bit wider than the 737, and some airlines have taken advantage of that to put in slightly wider seats.
The A320 debuted with a lot of new advanced technology. It was one of the first commercial jets that used a side stick versus yoke controls. This is still a key difference between Airbus and Boeing planes today. It also introduced fly-by-wire controls, meaning when you pull back on the side stick, it sends electronic signals to a computer to move the aircraft, versus a physical cable.
One could argue from a flight controls point of view, the A320 is a generation ahead of the 737. When it first came into the market, it was controversial. Fly-by-wire, when it first came out into the market, was something that was really just used in military airplanes.
The jet's debut, however, ended in a crash during the first demonstration flight at an air show in 1988.
When the A320 was first introduced, it suffered a series of accidents, including some fatal accidents that killed crew and passengers. And that really stalled the public acceptance of the plane.
It took a while there, too, to get traction, but when it did, well, it succeeded far beyond expectations.
A320 just came into the world 20 years later and has that advantage in terms of just fundamental design differences to the airframe.
By the 1990s, the A320's success would start to put pressure on its U.S. competitors. Airbus, which was backed by European governments, made its first operating profits.
Once Airbus was more market-proven as an aircraft builder, and U.S. airlines started to see the performance results of the Airbus aircraft in other airlines' fleets, they became more open to buying Airbus planes. And it was really the A320 that helped Airbus crack the door open into the US market and many other parts of the world.
Basically, Boeing, through all of this, had 50% of the market. So what you basically had was Douglas, Lockheed, and Airbus duking it out for the other half. Lockheed exited sometime in the mid-'80s, and then everyone knew McDonnell Douglas, matter of time.
In 1997, McDonnell Douglas merged with Boeing, forming the duopoly we know today.
If you think about the evolution of Airbus, Airbus really started in the narrow-body market with no market share, edged out Douglas, and then continued to get share.
The Boeing 737 family and the Airbus A320 family are the company's best-selling planes and have been a crucial segment of competition. The list price for one A321neo is around $129 million. Competition was head-to-head when it came to wide-bodies, too. In the 90s, more fuel-efficient twin-engine wide-bodies were introduced. Airbus debuted the A330 and 340, while Boeing introduced its 777.
The A330, they kept refining it at Airbus. It did pretty well. And then Boeing attacked with the 787 Dreamliner. And despite all of the flaws baked into that development program, it did better than the A330 in the long run.
Then from 2003 to 2005, Airbus took more orders and delivered more planes than Boeing.
That 50-50 formula kept persisting, and what Boeing was doing was effectively winning on profitability rather than market share. They were willing to say, all right, we're going to be 50%, but our margins are going to be 9% and yours are going to be 4% or less. It was a formula that worked for them until, of course, the problems with the MAX.
Despite declining sales for four-engine jets, Airbus spent billions creating the biggest double-decker, quad-engine commercial aircraft in the world, and possibly the most identifiable Airbus plane, the A380. It was in service from 2007 until it ended production in 2021.
The A380 is an engineering marvel. Unfortunately, in a way, the A380's success was eclipsed by the success of Airbus's smaller aircraft, namely the A330 family and more recently the A350, which are twin-engine aircraft that can hold 250 to 400, 450 or so passengers and operate ultra-long-range routes.
You looked at Airbus and you thought, wow, you're going to be tied for number one. You might even be number one. The only thing you could do to screw that up is launch a super jumbo for a market that's going away super fast. And that's exactly what they did. It cost them a decade.
Today, Boeing still dominates the wide-body market with nearly 56% of the global fleet. These aircraft are used for long-haul travel like international flights. Boeing currently has a backlog of over 1,500 wide-body planes. The company has had multiple manufacturing issues with its 787 Dreamliner, and the 777X, which has yet to be certified, is years behind schedule. In 2012, Airbus announced it would begin manufacturing in Mobile, Alabama.
Go back to 1978, and Airbus had a small office here in the US with about a dozen people working there. Roll forward to 2025, and we have a very large manufacturing facility that manufactures airplanes in Mobile, Alabama. We build helicopters in Mississippi. We build satellites in Florida, and actually are present in over 40 locations across the US.
Today, Airbus's biggest customer is Delta Airlines. It has slightly more Airbus planes in its fleet than Boeing.
Airbus has had a different manufacturing strategy than Boeing. Theirs has been more regional. So they have a final assembly plant, a FAL, as they call them, in Asia, one in North America, one in Europe, where Boeing's final assembly has been highly concentrated in North America. China was almost exclusively Boeing customer for many, many years. By having a final assembly line in China, I think Airbus would argue that that helped them get some share in China.
Airbus has been manufacturing in the U.S. for nearly 10 years. It's about to open a third production line, 2 of which are for the 320 family and the other for its smaller 220 jets it acquired from Bombardier in 2020. In 2010, Airbus announced a new variation of its best-selling narrowbody called the A320neo, short for New Engine Option, which promised a 15% less fuel burn than the previous generation. In 2011, Airbus had a record number of orders for 1,419 aircraft, more than double than the year before. That same year, American Airlines, which had been strictly a Boeing customer, put in an order for hundreds of these new planes. And in 2019, the A320 family surpassed the 737 in total orders.
Originally, the business case was for around 600 airplanes, and now we are up to 19,000.
Boeing's response to the more fuel-efficient A320 was the re-engined 737 MAX that debuted in 2017. But over the next few years, the manufacturer faced a series of challenges. In 2018 and 2019, 2 737 MAX 8s crashed and killed 346 people. It was later found a flight control system known as MCAS had malfunctioned on both flights. The planes were grounded for several months and production rates were reduced. Then the pandemic brought air travel to a halt, and the company had a record loss of $12 billion in 2020. Airbus saw losses of over $1 billion in both 2019 and 2020, but returned to profitability in 2021. But Airbus has consecutively had more annual orders and deliveries since 2019, making it the world's largest plane maker. Then in 2024, a door plug flew off a Boeing 737 MAX 9 plane, leading to more production delays of its best-selling jet, and an annual loss of $11.8 billion in 2024.
Airbus has profited from the challenges that Boeing has faced. Some airlines decided to place orders with Airbus for aircraft rather than Boeing.
And if you look at Airbus's backlog today, it's dominated by A321.
Airlines looking to cut down on fuel costs have been turning to these more efficient, longer-range narrow bodies for longer flights like JFK to LA or the East Coast to Europe.
Of our single-aisle order book, or backlog as we call it, 72% are the Airbus 321, and that's opening up routes and markets that they couldn't fly directly before.
The economics with single aisles were so much better. than the economics with wide bodies. And the Airbus A321neo wasn't perfect, but it was the biggest and best single aisle you could get, and leading Airbus to effectively a 60 or 65% market share from the standpoint of both deliveries and orders and backlog. It's become the hinge factor between the two.
Boeing doesn't really have a comparable airplane. The 737 MAX 9 isn't quite as big. The 10 is big, but it doesn't quite have the range. So where Airbus has done well in the market is they have a product that Boeing really doesn't have.
The 737 MAX 10 has a range of 3,100 nautical miles and can seat a maximum of 230 people, versus the A321neo, which has a range of 4,700 nautical miles and can seat 244 passengers. But the MAX 10 has yet to be certified.
The bad news is, given these delays, these many-year delays, and given the challenges, and also, frankly, you've got this attack on the administrative state in Washington, which is also toxic from Boeing's standpoint. These are resources they need to certify planes, and they're increasingly in short supply. So there's a lot about DOGE and the attack on the FAA and other administrative agencies that's really not at all good from the standpoint of Boeing certification.
In 2024, Airbus delivered 766 planes, compared to Boeing's 348. Most of the revenue from aircraft is received on delivery. Boeing 737 MAX production has been capped at 38 planes a month since January 2024 by the Federal Aviation Administration. That rate was 52 planes a month prior to the pandemic and 2 MAX crashes. So far in 2025, it surpassed monthly delivery goals compared to last year. Airbus has faced production challenges too. It, like the rest of the industry, has been dealing with supply chain issues post-pandemic and an engine recall for many of its jets.
There was the Pratt GTF engine 2 years ago with the difficulties they encountered with the metal powder issue that is leading to a big recall campaign, and that is limiting the number of engines going for new fit for us. Also last year, with production difficulties faced by CFM and their supply chain, that has led to a difficult end of 2024 and also some shortages at the beginning of this year.
Airbus deliveries have been lower compared to last year, but the company said it still expects to deliver 820 new planes by year end.
In the medium term, it's hard to see anything that stops Airbus from controlling that all-important mid-market segment. We're really talking about a battle for the 2030s here. The 2020s have been decided.
The industry could face other challenges like tariffs and a possible recession in the coming months.
For an industry that's thoroughly globalized, this is absolutely toxic. There's a lot about these tariffs we just don't know right now. But it's remarkable the extent to which the jetliner industry became a model of free trade, and the U.S. competed and absolutely did great with an enormous trade surplus, and that's now at risk. Now, as for the airplanes themselves, the majority of structures are indeed imported.
Even though Airbus now has manufacturing in Mobile, Alabama, it still imports parts like wings and fuselages.
The US exports 6 times more than it imports in aerospace products and components. And so the concern about a tariff regime is that is then going to impede in that supply chain, and it's going to add to the costs of the airplane.
More expensive airplanes could mean rising costs for the consumer. Both the Boeing 737 and the Airbus A320 and their variations are newer interpretations of jets designed decades ago. The industry has been waiting for new technologies, engines, and designs to be introduced.
The A320 has been a platform that's been around for many decades. The next generation airplane will be a completely new platform. It's going to be based on new propulsion techniques, a new wing design, new materials, and also a more digitally enabled airplane. We hope to see that flying in the second half of the next decade.
It is so much more complex to design and build a new airliner today than it was decades ago. Airlines are struggling with what is the right design, what materials go into it, what engines do we use for it, what fuel powers it.
In 2022, Boeing's CEO at the time, Dave Calhoun, announced that it would not introduce a new airplane into the next decade.
So on that range and payload envelope, they've really got nothing that competes with the 321neo. They need a new jet. They absolutely need a new jet. And so that, of course, told people that they should go and order an A321neo, which they did. There were 1,300 sales in the following 12 months. So Dave Calhoun, in a lot of ways, was the very best CEO that Airbus ever had.
Airbus hasn't announced a new clean sheet plane either, but at a recent summit outlined what technologies could potentially power a new single-aisle aircraft. And despite Boeing's struggles, experts say it's not inevitable that Airbus's lead continues.
Airbus is just positioned better because they just have more latitude to kind of wait and see because of their product lineup today.
Right now things look fantastic, next 5 years at least. But eventually someone is going to disrupt them, and it might just be a resurgent Boeing. And for the first time in way over a decade, they actually have a really good leader at the helm.
Experts also say China's COMAC could enter the market.
If COMAC is able to make inroads in the West, especially if the Chinese government decides to subsidize the sale of those airplanes to get some sales into Western airlines, that could introduce one of the most serious threats to both Airbus and Boeing that we have seen in a long time.
Brazil-based Embraer could also be a strong competitor to enter the narrow-body space. The company, which makes smaller regional and business jets, has been talked about as a company that could disrupt the duopoly.
I'd put my money on Embraer first. Embraer is a very, very capable company, good engineers.
If Boeing doesn't do a competitive response, then again, the 321neo becomes the hinge of fate. Obviously, in the long run, a lot can go wrong with that. It's your classic innovator's dilemma. Why would you disrupt yourself when you're the overwhelmingly dominant player on the market? So will something change? It must. Entropy, right? But until then, Airbus gets 2/3 of the market, which is not at all bad.
United Airlines has been flying people for nearly a century. And it's grown to be one of the biggest operators in the world. In 2023, it flew over 160 million customers. It serves 348 airports globally with a fleet of 1,375 planes, 106,000 employees, with over 4,500 flights a day. But when it comes to profitability, it's still chasing that number one spot.
The biggest competitor that United has right now is Delta. Delta has been at the top of the industry for a long time. It's the most profitable, has the best margins.
We haven't exactly achieved the number one profitability status in the industry, but I know we're on our way. It's really front of mind for all of us.
It's a very large legacy airline. I do think the last 7 years, it's felt a bit more like a startup airline.
American Airlines, Delta, and United, known as the Big Three, all have similar business models, so competition comes from hub locations, product offerings, and route networks.
United actually has the largest, most expansive route network abroad of any of the big three U.S. airlines. So in a way, United is America's flag carrier to the world.
The airline has been spending billions on new airplanes, lounges, technology, and diversifying its cabins to offer a broader range of products to its customers.
United's profitability and overall business performance has been steadily improving over the past 5 years.
Delivery delays on new aircraft from Boeing and Airbus are hindering some airlines' growth plans. Both Delta and United have faced additional challenges this year. United had a string of maintenance issues, while Delta had to cancel more than 7,000 flights over the course of 6 days in July after the CrowdStrike outage. That's more than all of Delta's cancellations in 2019. Despite these events, Delta and United stock are up this year, with United shares rising over 80% year to date.
Since the recovery post-pandemic, they've had a better game plan than basically anyone else. It really hasn't changed.
CNBC explores how United became one of the largest airlines in the world and what's next for the carrier. United Airlines' roots date back all the way to 1926.
The original name of United was Boeing Air Transport, and it was owned by the Boeing Company until Boeing had to spin it off in the late 20s, early 30s, when it became United.
It began by delivering mail and continued to grow as the dawn of the jet age took more people to the skies.
United Airlines has a very, very strong and rich history.
But the United Airlines we know today is actually the product of various mergers.
All the top airlines have grown through mergers. United's first big merger was in 1961 with Capital Airlines, expanding its reach to more of the East Coast.
In 1985, they bought Pan Am's Trans-Pacific route network, which gave them an expansive route network into Asia.
Another was announced in 2010 when it agreed to merge with Continental Airlines.
Think of United as a Brady Bunch of airlines that now has a single name and a single paint job.
The Continental merger was really significant. What it did is it really set up the modern day United Airlines.
Over the course of a century, the airline has faced many challenges. On September 11, 2001, 2 of the planes hijacked by terrorists were United planes. Then air travel demand plummeted.
The United States was also in the middle of a recession. So what we saw was several airlines, US Airways, then United Airlines, had filed for bankruptcy in the years following the terrorist attacks.
It came out of bankruptcy in 2006 with a reduced staff and fleet. The Great Recession in 2008, coupled with rising fuel costs, hit the industry hard. Then there was a series of mega mergers: Delta and Northwest, American and US Airways, and United with Continental.
The difficulties in that merger were many and varied. Trying to put 2 large corporations together is always difficult. You had 2 very different cultures.
Oscar Munoz was on the board of United Continental Holdings in 2010 and later served as the CEO of United from 2015 to 2020.
There was not a lot of love between the 2 organizations and groups. The company was not in a wonderful place with regards to unison, cohesion, singular point of attack operationally, financially, business-wise. So it was a bit of a mishmash.
The $8.5 billion deal with Continental brought key hubs like Newark and Houston into the United network. With United's strong presence in Asia and Continental's in Europe and Latin America, it created the world's largest carrier at the time, or as the New York Times described it, a behemoth of an airline.
You had 2 of everything. So how do you decide the systems and the people to run them when you have this quote-unquote merger of equals where it's kind of top-weighted towards one side? Most of those systems, most of those leaders came over to run the much, much bigger organization. There was more than a few CEOs in a very short period of time. And it didn't help that my arrival came with a little bit of drama and crisis with my predecessor, with some issues that they got in from a legal perspective.
Munoz is referring to the ousting of CEO Jeffrey Smizak and what became known as the chairman's flight, after the airline reinstated a non-profitable route to accommodate the chairman of the New Jersey-New York Port Authority. Over the next few years, the airline faced some of its biggest public relations disasters, which ranged from a man being dragged off a flight to a passenger's French bulldog dying in the overhead compartment.
So you had a company that lagged and underperformed its potential overall. So they were like, if you looked at it from relative to the big 4 competitors, they were number 4 in overall margins and profit.
What was important about the whole culture we built at United, honestly, if COVID had happened like right when I had taken over or right before I had taken over, I'm not sure United gets through it. We were by far last. Made a ton of progress right before COVID. Our financial results were stellar, well ahead of schedule. And at the same time, we were beginning to slowly inch up.
The COVID-19 pandemic brought air travel to a near halt, and United alone lost over $7 billion in 2020.
United did a really smart thing during COVID. They didn't let go any of their pilots, and that helped United recover faster than some of its peers did when travel rebounded as COVID ebbed.
Airlines survived in part because of a more than $50 billion taxpayer bailout. It was the biggest one in history for the industry, and it did help airlines stay afloat. And a condition of that aid was that they weren't allowed to furlough any of their employees.
Airlines also have other revenue streams like credit cards, which can bring in billions of dollars a year.
This is one of the only times in which a downturn happened, and there wasn't massive restructuring at that time. So the U.S. domestic market just didn't change. And so United, kind of took advantage of that, where they're like, well, we know that the international side of the equation will change, and it did. And so we're going to be ready for that recovery. And now you're starting to see structural change happen within the U.S. airline industry, whether it's being Spirit potentially, going into bankruptcy or restructuring, and others kind of changing their models. And so United wants to continue to deepen their moat while others continue to figure it out.
One thing that did change during the pandemic was United got a new CEO.
Scott Kirby came in as CEO, and that marked the beginning, I think, of United's strongest turnaround.
As the pandemic ended, air travel made a huge comeback with record-setting numbers. At the end of 2023, United surpassed American Airlines to become the second most profitable airline in the U.S. Delta remained at the top.
When I think about the differences in Delta and United, it's just the overall route network.
The route network is really what we are buying as passengers.
United just announced new routes to places like Greenland and Mongolia in 2025. The airline said adding unique destinations is important to its customers and keeping them loyal to the airline.
Picking new routes, it's a part art, it's part science. If you just looked purely at the numbers, you would never come up with a new destination because every airline is looking at all of the same data.
Some routes like Cape Town have been successful, but others like Bergen, Norway were a flop and removed from the schedule.
When I think about just the competitive environment and how you kind of get there to be the largest airline and most profitable airline, is that you have to be really relevant to your customers in whatever markets you're flying. And you have to be able to compete very effectively. And sometimes that means being able to lose money in certain markets while making a lot of money in others.
United does have the most international routes of any U.S. airline.
We still have not achieved that domestically. We're still, number 3 or 4, depending on how you measure it. But we think we have a lot of runway in front of us there as well.
United is headquartered in Chicago, which goes back and forth with Denver to be the airline's busiest hub. Denver is the airline's fastest growing hub and 3rd busiest airport in the U.S. Delta's Atlanta hub is ranked number 1 busiest, and American Airlines' Dallas hub is the 2nd. Denver Airport has a lot of room to grow compared to some of the older, more constricted airports.
When we're planning, we face a number of constraints. Aircraft and slots are usually the 2 biggest.
New York is the busiest airspace in the world, where United operates its Newark hub. One of the ways United plans to grow in Newark with a lack of gates and airspace is upgauging, swapping out smaller planes for bigger ones to fit more people.
United very much wants to rule the world. Their order book suggests that.
In 2021, the airline announced its largest ever aircraft order for 270 new planes with plans to add more roomier seats and seatback entertainment.
Once we received and had a stable set of earnings, we were finally allowed and possible to invest in the future into aircraft and products and innovations. And that's really the biggest change.
We've made a really strong decision to do is to retire regional jets and replace them with mainline jets. So domestically, I think it's adding larger airplanes between cities and growing the network that we have, but not really adding a lot of new cities, but actually growing the footprint.
United Airlines is an airline that is trying to be a more premium airline right now, much as Delta has been for more than 10 years.
Delta's kind of the envy of the industry because it has had the widest profit margins for a long time. It has a very high spending clientele. It has a very lucrative credit card deal with American Express. And what United is doing now, it's going after the high spending customers.
A big source of growth in the airline industry recently has come from premium seating.
Across the entire experience, we're really focused on trying to embody premiumness. We, across the board, are looking for ways to give customers what they want.
But not all customers want the same things.
One of the challenges that large airlines like United have is trying to be all things to all people, all kinds of customers. They, of course, want that high-value, high-spending customer to buy seats in the front of the plane, but they're also going after customers that maybe want the simplest experience possible, and their main concern is getting the cheapest fare.
The strategy to offer a wide range of seating options seems to be working. In the 3rd quarter, United's premium revenue, including business class tickets, rose 5%, and sales from its basic economy tickets were up 20% compared with last year.
We've been able to offer more seats at more price points, and that has allowed us to compete with the low-cost carriers in a price-effective way for the basic economy traveler, but it also allows us to compete with the foreign flag carriers by offering a better product in the front of the cabin. That's also helped create a moat around United Airlines to drive sustainable earnings.
In general, across United, we sacrifice seats in the coach cabin to make sure there's more economy plus seats in each economy cabin for consumers to pick from.
One thing that United does and has done for a long time that Delta is actually copying now is that they have a different tier of airport lounge, a Polaris lounge for United's top customers that are flying in the front of the plane internationally. And now what Delta is doing, partially because their lounges have become so popular, they're kind of segmenting the lounges and having a top tier lounge, the Delta One Lounge, and that's really a page from United's playbook.
Delta also just announced new interiors for much of its fleet starting in 2025. Technology has also become a big choice to consider for flyers. United just announced it will offer free Wi-Fi using Elon Musk's Starlink system on hundreds of aircraft starting in 2025. Delta has offered free Wi-Fi to its SkyMile members since last year. The airline industry is a long-cycle business. Decisions like buying new aircraft must be locked in years in advance. United has been making investments in sustainable aviation fuel, eVTOL and supersonic air travel. It even opened a pilot training school to be better prepared for the growth in air travel and a wave of pilot retirements.
They do face a very strong competitor in Delta. Delta is still regarded as the standard setter for excellence among the three largest U.S. airlines. Where the gap is getting bigger is between United and American, which just seems to be falling further and further behind.
United just reported higher than expected earnings and forecast higher airfares going into 2025. Its stock hit a high it hasn't seen since February 2020.
United's, when you just look at their overall earnings profile, like they tend to be very weighted to the second and third quarter. That is the industry in general, but Delta tends to do a much better job on the shoulder months. So if United can kind of figure out the off-peak or shoulder time frames a little bit better, you could potentially see them get in line to overcome Delta at some point. But the reality here is that there can be two.
I don't think all airlines are the same. I think every airline is different. And this wheel of investment and growth is what we're on. It's a really powerful wheel, and once you're on it, you want to stay on it and you want to keep pushing forward. And I do think that 5 or 10 years from now, consumers will know without a doubt that United is distinctly different than most of the other competitors they can choose to fly.
As if late-night comedians needed another reason to make fun of Spirit Airlines, the discount pioneer filed for bankruptcy in November.
You're trying to tell me they weren't in bankruptcy this entire time?
The number of passengers boarding U.S. airlines hit an all-time high in 2024. U.S. airline giants like Delta and United saw their stock prices soar last year, but Spirit Airlines was down 90% before it filed for bankruptcy.
Spirit has had one challenge after another coming out of the pandemic.
The airline industry has been dealing with supply chain issues and rising fuel and labor costs. In addition to that, Spirit has struggled with an engine recall, grounding dozens of its jets, weaker than expected sales, and a failed acquisition with JetBlue.
Everybody's dealing with the fact that costs are 30% higher than they were in 2019. Airlines that have shown more success have great exposure to premium and corporate, which makes sense because those are the kind of demand segments that you could pass through more of the cost easily.
The icon of budget air travel in the U.S. has not been profitable since 2019, and it lost over $2 billion since 2020. It is the first major U.S. airline to file for Chapter 11 since American Airlines 13 years ago. CNBC explores what drove the airline to bankruptcy and what's ahead for the carrier. Spirit Airlines is known for its bright yellow planes and cheap fares, a business model that helped reshape the airline industry.
Before the pandemic, Spirit was one of the more profitable U.S. airlines. They became wildly successful for a pretty simple business model. They offered a rock-bottom fare, and they charged fees for everything else.
Everything else includes bags, both checked and carried on, seat selection. It even charges for water. It started its a la carte model in 2006, spearheaded by its CEO at the time, Ben Baldanza.
Spirit Airlines was very successful in driving down fares in many markets. The larger competitors, the Uniteds of the industry, were trying to compete with them, and it sparked fare wars. And ultimately, for consumers looking for cheap flights, it was great.
Spirit is often ranked as one of the safest airlines in the U.S., but it's also been ranked one of the world's worst airlines due to customer complaints.
Guys, never fly with Spirit.
Somebody get on this flight or not? Yes, we do. All right. So everyone's going to shut up, and we're going to say this once, and we're only going to say it again because we're frustrated as hell.
After a steady streak of profits, the company has struggled to earn money since 2019. The pandemic was devastating to all the airlines, but that was just the start of Spirit's financial woes. Passengers have since returned in record numbers, but airlines are facing shortages of new planes and higher labor costs.
The industry having costs that are 30% higher than they were in 2019, all fares have to be about 30% higher than 2019. So when you are catering to the market that's more price sensitive, it's going to be harder to pass through those costs.
Airlines like Spirit and Frontier are built on a model that depends on keeping costs low.
Coming out of the pandemic, nobody had low cost. Pilots were in short supply. You saw these enormous bonuses being handed out. New labor contracts came out. Spirit was among them. They bumped pilot pay more than 30% over a couple of years, and that was a big cost to them. Inflation, the same way that it affected consumers, it also affected airlines.
On top of that, many airlines had to shift growth plans due to the delays in aircraft deliveries. Spirit, who has an all-Airbus fleet, was affected by a Pratt & Whitney engine recall that grounded dozens of its jets.
So this has been a bigger drag for Spirit. It has by far the largest exposure to this issue.
That kind of limited its capacity. You need those planes to make revenue and get people on board and bring cash in the door.
The other thing is that they have been in this M&A umbrella for 2 years. So 2 years of, trying to figure out if Frontier or JetBlue was buying them.
In February 2022, Frontier Airlines agreed to merge with Spirit. But a few months later, JetBlue came in with a $3.6 billion all-cash offer.
In announcing this, you guys said during the extensive discussions held between Spirit and JetBlue, JetBlue itself admitted that a lawsuit from the DOJ seeking to block the merger was a 100% certainty. Let's be clear. Are you basically saying that JetBlue said to you guys, look, we know we're not going to get this thing through without having to go to court?
Yeah, that's what they told us, which is we agree with, by the way. And it kind of makes the whole thing to the point of being illusory. It gets to that greater point. And it really does call into question what the motive here is.
The executive team at Spirit told their shareholders, we think Frontier is the better option. The shareholders saw the all-cash offer, they turned down the Frontier deal, and then they went for JetBlue.
In January of 2024, a judge blocked that deal, and it ultimately fell through. Over the past decade, low-cost carriers have seen increased competition from legacy carriers like American, Delta, and United.
Spirit had become very successful, and the big airlines did not like that. They had a lot more firepower than, little Spirit Airlines, and it saw that fares were going down in some of its key markets. They don't like someone coming in and offering these double-digit fares into their markets. So what Delta did and sort of kicked off this industry trend was they offered their own sort of bare-bones fares. It was called Basic Economy.
Typically, a basic economy fare is very restrictive and only includes the flight. It is non-refundable, non-changeable, passengers can't pick their seat, and board the plane later. A bare-bones fare on legacy airlines still comes with non-alcoholic beverages and a snack. On Delta and JetBlue, a basic economy ticket still comes with free Wi-Fi.
What Delta realized is that the base fare was a nice hook for the ULCCs, and by the time the passenger went through the booking process and put everything together, they were now paying a fare that Delta was willing to support.
Travelers' preferences have changed coming out of the pandemic, with many consumers willing to spend on better seats or perks like lounges. Delta said its premium revenue has outpaced standard seats for several years. United said it's been sacrificing economy seats to add more Economy Plus seats, its extra legroom option. It reported a 5% rise in premium revenue and 20% rise in basic economy tickets from a year ago.
And as United up gauges. I think they're going to have more seats to dedicate to basic economy. But I look at that more as a defensive tool than a ULCC killer, but it does make life harder for ultra low-cost carriers competing in these large markets with the legacy carriers.
The pressure on ultra low-cost airlines has led to some big changes. Spirit and Frontier got rid of most ticket change fees last year and started offering pricing bundles that includes things they used to charge separately for. Also, while Spirit already offers travelers the big front seat, Frontier said it will install first-class seats to its fleet.
Frontier has also had a period of losing money, but they've had other challenges.
Frontier CEO Barry Biffle said one of the biggest gaps in the company's revenue model came from not offering first-class seats. Even Southwest Airlines, the fourth biggest carrier in the U.S., is making changes. The airline that has had open seating and one-cabin service for over 50 years is now adding extra legroom seats and ending open seating to improve revenue.
With Southwest, you're seeing a lot of just evolving with customer demand that maybe is 5 to 10 years too late, but they're making that change. You know, where they fly has changed, how full the planes have become has changed, and so that brings a change in customer preference of wanting this surety of an assigned seat.
As a result, airline cabins have become more segmented to offer different products for multiple price points. Many now offer more than just coach and first class. A long-haul flight could have first, business, premium economy, extra legroom, regular, and basic economy options.
Everybody's kind of recognizing that people are willing to pay up for experiences. And it's interesting, where most of the changes are happening is in the middle end of the experience segment. So it's not first class seats that are getting added, it's really premium economy.
That model is so important to airlines' loyalty programs, which is really what drives their profits these days. It's had enormous growth. These credit card agreements with some of the country's biggest banks bring in billions of dollars for airlines. And if you don't offer products that customers can cash in those points for, then you're toast.
Even though Spirit has filed for Chapter 11 bankruptcy protection, that doesn't mean the airline ceases to exist. The airline will continue to operate and sell tickets for future flights. Analysts expect Spirit to come out of this process a smaller airline with fewer routes.
One thing that is likely to happen in Spirit's bankruptcy is they need to get their costs in check, and they need to do it very quickly. They've already sold a chunk of their fleet to raise cash. They are also likely to lay off more of their workforce. They've furloughed more than 300 pilots, but there is probably more shrink in the company to come.
Merger talks could also resume in 2025.
I think a combined Spirit and Frontier give them the best chance of really giving a good competition to the legacy carriers and the low-cost carriers, because you get a ubiquitous network, you get economies of scale, and a lot of benefits that can help you go after that market.
Spirit said in an emailed statement to CNBC that its new travel options and increased flexibility reflect our ongoing efforts to provide greater value and comfort, and that it is well positioned for long-term success, and are confident that we will become an even stronger competitor upon emergence from the Chapter 11 process. With all of these challenges facing low-cost carriers, questions remain about whether the low-cost model is dead or if it's just evolving.
They are recognizing that they can appeal to a passenger that wants a little bit better experience, like extra leg room, maybe a little bit more service in flight. So they are recognizing that and trying to appeal to that and expand their customer base a little bit more. But in general, I don't think low-cost carrier industry is dead. It just needs to be resized for the current realities.